Hi, I'm Alex. Welcome to the channel and thanks for tuning in. In today's video, we're talking HITI and specifically the very recent news that HITI was effecting a reverse split or a share consolidation in order to meet the listing requirements for being uplisted to the Nasdaq. This is one of the final key requirements which is required from the company to complete the uplisting and is a huge strategic step for the company. However, this is not the end game at all. This is really just the start of where it's getting really exciting. Why is that? Well, stay tuned because this is not one that you want to miss. Please can I ask a favour and that you smash the like button? By doing so, you massively help our crusade against clickbaited content on Investing YouTube. You help the algorithm learn that it doesn't only need to push the clickbaited content and ultimately that that's not good for Investing YouTube in the long run. You've done an amazing job of this so far. Thank you so much and please keep it up. If you're new to the channel, make sure you're subscribed. If you want to see more content, join the private Discord and the live video calls, then check out the Patreon group. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So on Wednesday this week, HITI announced that it was undertaking a 15-to-1 share consolidation. We will come on to exactly what this means, but we have known for some time that this was on the agenda, and this is a key step to ensuring the stock price is above the $4 requirement for stocks which are seeking to uplist on the Nasdaq. Now yes, sometimes that can be lower than $4 in certain circumstances, but in this situation it's best to be safe and err on the side of caution rather than trying to push certain technicalities. Once the uplisting is completed, HITI will be the first ever major cannabis retailer anywhere in the world to be listed on the Nasdaq. Now that is massive, it's a really important development, and we'll come on to exactly why later in the video. Now timeline wise, we can expect HITI to have completed that uplisting and to be trading on the Nasdaq within the next few weeks, say 10 days. So now, what exactly is a reverse split or a stock consolidation, and what does it mean? Okay, so basically it's where the company reduces the number of shares it has in circulation. Now, given this is a 15-to-1 share consolidation, that basically means that every 15 shares will be consolidated to 1 share. So if you have 150 shares as a shareholder, following the consolidation, you'll have 10 shares. Now, before anyone worries about this, the value of your actual investment remains the same. So with the consolidation, the actual price per share increases. So using the same example we had before, if each share was worth, say, $1, it would now be worth $15. Let's just recap to make this totally clear. If you had 150 shares at $1 each, you clearly have an investment worth $150. Now, following the reverse split, you then have 10 shares, each which is valued at $15 each. Again, a $150 investment. There is no change in the overall value of the company or in the value of your holding, and this is so important to remember and to understand. Now, the next important thing to address is the warrants. Now, clearly there are a number of different warrant instruments that are trading for HITI, and the actual number of shares which each of these accounts for and can be converted into will remain the same. However, here the adjustment is in the strike price, and this is adjusted to account for this. To put into simple round numbers, if you have a warrant for 1 share, which has a strike price of $1, that will remain a warrant for 1 share, but the strike price will be adjusted, so it's instead a strike price of $15. So within HITI, before this reverse split, HITI had just over 690 million shares outstanding. Following this reverse split, this overall share count is reduced to just over 46 million shares. Now, I have seen some concerns from people online talking about the scale of the reverse split, saying that they're not happy with it. People thinking that actually it's too consolidated and saying they would have preferred to see a 10-in-1 or a 5-in-1 split. Now, personally, I'm actually happy with the 15-for-1 split, as actually the difference in the ratios does not mean much to me as it doesn't change the overall size of my position. Now, what's really important to remember here is that this figure's not just been plucked out of thin air. This is something which has been decided by the company following consultation with investment bankers, ETFs, potential institutional investors, lawyers, loads of really experienced professionals. So a lot of thought has gone into this and it's not been plucked out of nowhere. This decision's ultimately been made to ensure that the price of a single HITI share is optimally priced at the point of uplisting. These guys are professionals and they do hundreds of these a year. Let's believe that they know what they're doing in this respect, and so personally I'm pleased with the 15-for-1. Now, another thing which I have seen a number of people a bit concerned about online is about the actual reverse split itself, seeing this as being a bad sign. Now, clearly you can find examples of situations recently where companies have diluted shareholders massively and then have executed a reverse split in order to decrease the overall float, with actually no specific reason for doing this. Yes, in these examples, it's clearly not something you want to see from stocks you're invested into, but also that's definitely not what's happened at HITI either. Let's refresh our memory. So HITI has made a number of acquisitions and a number of other strategic steps which have been funded by share offerings, and that obviously increases the share count. However, the proceeds of these, both the capital used for acquisitions and the funding for growth, have both been accretive for shareholder value. What this means is that the negative impacts on value, which say issuing 10% more shares has, is outweighed by the value which the acquisitions create. So ultimately, it's accretive for shareholders, not dilutive. In simple terms, it's good, not bad. Personally, I would happily see loads of new share offerings if the funds that they raise from those continue to be used to make acquisitions like the ones they've made recently, which are massively accretive to shareholder value. Now, I'm not going to go into the maths again, I have discussed it in previous videos, but this is a real strength of HITI. They've done some great deals, and there's definitely more of this to come. Now also, don't take my word for this, let's wait and see. We've always said this is a long-term investment, and this is still at the very start of this. Wait and see the HITI earnings reports coming out over the next year, and it will very quickly become apparent the quality of these deals and the strategic rationale which they have. Anyway, back to the original point, this is not just a tool to make a stock look less diluted, this is a step which is required to meet the uplisting requirements of the Nasdaq. Now let me summarise this point as I have digressed a little. Some of the recent reverse splits have been received poorly by the market and were ultimately undertaken for the wrong reasons. This is not the case with HITI in this scenario, so again, it's not something which unduly concerns me. Now, one other important thing to touch on is the analysts which currently cover the stock, which currently are ATB and Akerna. Clearly, the price targets which they previously had on the stock also need to be adjusted to reflect this reverse split. So as we know, ATB, for example, their current stock price target is $1.50. So adjusted for the stock split, this becomes a price target of $22.50. Now, I mentioned earlier in the video that this is just the start of the exciting period for HITI. For people thinking that this is what we've been waiting for, you are correct, but not because this is when the position's played out at all. The uplisting now instead enables the company to deliver on its strategy much more effectively, and as well as this, create a number of new exciting avenues to increase the stock price of the company. Firstly, let's think about this in the context of the strategy. We know that HITI has a strategy focused on organic growth, in new store openings, in increasing the number of customers, and increasing the share of wallet spend online. All of these are things that they will continue to deliver on. However, the other facet to their strategy is the acquisition-led growth. In the last 6 months, they've completed 3 great acquisitions, all of which have been acquired for great valuations, and all of which have been highly accretive for shareholder value. Securing and completing the Nasdaq uplisting is really helpful for the company to be able to turbocharge this part of its growth strategy. In all of the deals they have done, part of the consideration or the value paid to the sellers has been in the form of HITI shares. Now, I'm not going to go into this again as I have covered it loads on the channel already, but this is great to see as it shows an alignment of interest and a belief from those sellers in the value of the combined business. It also helps HITI being able to pay lower prices for businesses it acquires, because in a way, the seller is also a buyer too, given their interest in the overall group. Now, this is something which HITI will definitely continue to do. They'll be acquiring the best quality companies and companies which have the greatest strategic fit, but also cultural fit. Clearly, as we've seen in the deals done so far, when HITI does deals and makes acquisitions, they try and bring the key management teams into the HITI group, and that's so important in helping drive the growth within those acquired businesses, but also ensuring that Raj can continue focusing on the group and delivering this acquisition-led growth strategy. However, stepping back, shares in a Nasdaq-listed company are much more attractive than ones on an OTC listing, especially for a seller. There are loads of reasons for this, but this is an important dynamic not to overlook. Whether it's for tax reasons, challenges with the geographic status of the stock, there are loads of reasons. Ultimately, this alone will help the company get some other deals, which are no doubt in advanced stages of negotiation, over the line in relatively short order. Again, in my book, this is great news. There are also a raft of other reasons why a Nasdaq uplisting can be good for company stock price. I will address these in order, but those are focused around new investors, both retail and institutional, new analyst coverage, and ETF inclusion. Now, firstly, the uplisting means there'll be a large number of new investors who can now invest in the stock. Lots of retail investors will have access to the stock on low or no fee brokerages like Robinhood and Webull. Many of these investors were unable to invest at HITI before, whether that being due to massive fees or the unavailability of it on their brokerage platforms. The uplisting of HITI to the Nasdaq and becoming the first cannabis retailer listed on the Nasdaq will drive a lot of excitement within new retail investors, especially those in the US who now have greater access to it. In addition to this, many institutional investors and various funds are also restricted from investing into OTC stocks as a result of their incorporation documents. This uplisting will ultimately mean that they are able also to invest into HITI, and this dynamic alone should drive some increases in demand for the stock and drive up the stock price. The other dynamic to consider here is around total index funds, funds which have to invest into every stock on a specific index. They take their position on the company relative to its weight and proportion of the overall index. This also can create an interesting dynamic where actually increased demand from other investors drives the valuation up, which these funds then have to acquire more shares of and then further driving up the valuation. It will be really interesting to see how this plays out, but again, this is a reminder that it will not happen overnight. It will take some time, and so this one will play out over a little while. It's also worth noting here that over the coming weeks and months, we can also expect a little bit more increased volatility too. Now, we also know that a number of analysts who cover other cannabis-related stocks have participated in high-tide earning calls but don't currently cover the stock. There's a real possibility that upon completion of this uplisting, that these analysts also initiate coverage on high-tide. There is a potential range of analysts covering the full spectrum of reputation who could potentially initiate coverage on high-tide. If this was to be initiated with a positive buy and a good price target, it would clearly be really good news for the stock price. Now, I should say here that while I clearly am bullish on high-tide, I've not drunk the Kool-Aid. I do closely follow the company, its developments, and I do look to pick holes in all of the developments and news which is released. I'm continually looking for new potential risks or flaws in my own investment thesis, and so I do maintain a good degree of skepticism and do always do my own analysis on everything. That being said, I would be really surprised if any new coverage was initiated without a buy rating, and I would also be really shocked if there weren't any new risks or potential threats to our existing investment thesis that were identified. In summary, I do think we're going to see new analysts covering the stock, and I do think they're going to have really exciting price targets associated with the opportunity as well. Now, the other important thing to consider here too is the size of the float that the company has now. It's clearly decreased significantly by 15 times, and that actually means that much smaller volumes traded can have a much more significant impact on the stock price. It will cause increased volatility. However, as we know that on the horizon we have lots of exciting positive news catalysts, this could manifest itself in a better correlation between good news and good stock price increases. Over the past 2 months, HITI has made some really great announcements and some developments, and actually sometimes the market hasn't responded in the same way one would have expected it to. For example, loads of new store openings, putting it way ahead of its target on a run rate basis to deliver its full store count, a great acquisition in the shape of Fab CBD, lots of other developments, which with a smaller float, as we will see following this reverse split, will much likely have a greater impact on the stock price than they have done previously. Now, the final point to touch on here is also the inclusion in potential ETFs. Clearly, there's going to be a lot of excitement around HITI being the first listed cannabis retailer on the Nasdaq, and that will attract a great degree of excitement amongst ETFs as well. So I think we could also potentially see interest from ETFs in taking positions in HITI. So look, while this is a great development, it's an exciting milestone and something which shareholders have been excited for and been waiting for some time. This is just the start. The next 12 to 24 months with HITI will be incredibly exciting. The strategy it has and its approach to the market, without wanting to be too superfluous, is really going to position them to become the Amazon of cannabis over the coming years. At its current valuation versus peers or on a fundamental analysis, HITI is criminally undervalued, and it is now that this step has been taken with the uplisting that we will really begin to see the power which HITI has and how it will continue to capture market share with sensible acquisitions and create massive shareholder value. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, make sure you're subscribed. If you want to see more content, want to be part of the private Discord and private video calls, then check out the Patreon. And as always, let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the different perspectives, so please get involved. Thank you so much for watching, and I'll see you in another video.